Welcome to the channel, guys. My name is Jess. So it has been a busy couple of days for the crypto market as people price in potential upcoming changes to federal monetary policy. We've seen massive drops across the board from both Bitcoin, altcoins, and S&P 500. Bitcoin is now retracing back down to $95,000 to $96,000. So let's dive into the charts today to talk about the recent crash and the cause of that crash, as well as the potential for a bounce here and what we really need to see from both Bitcoin and altcoins for a true sign of strength. As always though, before we get into all that, make sure you guys smash that like button and subscribe to the channel to get regular Bitcoin analysis every Monday, Wednesday, and Saturday. If you're after even more content, be sure to check out my free Telegram channel, and if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. So if you guys have been following along with monetary policy at all in the last 3 months, you would know that it has been a really bullish 3 months for the risk asset market because we have finally seen rate cuts after a very long period of extendedly high interest rates, right? And the first one was in September. We experienced a 50 basis point cut, which sent the market absolutely rallying, especially altcoins, which have done really well in the last couple of months, right? We can see over here it's retouched or retraced the all-time high for altcoins at 1.13 trillion. And in December, we had a 25 basis point cut as well, which had already been priced in, hence very little reaction on that sort of news release. However, alongside that 25 basis point cut, we also received a little bit of information hinting or warning for changes to potential upcoming federal policy or monetary policy in 2025. So in September, when we had our first rate cut, what we expected in 2025 was a total of 6 rate cuts across the year. However, because of the recent, uptrending inflation, which is kind of natural considering we have decreasing interest rates, I think inflation has been growing more aggressively than the Fed had sort of, modeled for or expected. And as a result of that, they have now sort of changed the narrative. So the Federal Reserve on Wednesday in December, or on the 19th of December, came out basically saying that they are personally expecting to have fewer rate cuts in the next year. So instead of 6 in total, I think the new number is only 2 rate cuts. So still, obviously, the rates are going down, but the market's priced in 6. So naturally, we're going to have a little bit of pullback there, and we're going to see a very large shift to some sort of risk-off approach until we know in 2025 what's exactly going to happen and what to actually be able to expect. So if we take a look at the asset market, Bitcoin, altcoin, S&P 500, we've seen a really huge pullback. Over here, Bitcoin's dropped from the most recently new all-time high at 108.3 all the way back down to $96,000 to $97,000. Total 3 over here, we can see has seen a very steep drop over the last 2 weeks. I mean, we've already started to crash in the prior week just because Bitcoin was starting to struggle a lot against this level of resistance here at 102.5. But after touching that sort of base here of support, that prior close, dead cat bounce level close at $943 billion, we've seen a little bit of a bounce from altcoins. No longer, right? Massive red candle for the week. And S&P 500, I don't have the chart up, also went down about, I would say, I think it was 7% over the last 3 days. So a really big time and a really busy period, and a very sort of short time frame bearish period. So we're going to dive into the charts today and talk about, first of all, Bitcoin, focusing on Bitcoin, obviously, and the crucial levels of support that we're retesting here, the potential for further bearish moves, where that's going to take us, and what we need to see to really truly signal a sign of strength, and that, we're seeing that aggressive sort of shift back into bullish price action for Bitcoin and altcoins as well. Before we get into the rest of the video, guys, let's hear a quick word from our sponsor, BitUnex, where you can get 15% off all of your trading fees and up to $5,500 in sign-up rewards when you create your free account using the link down in my description box. BitUnex is an emerging cryptocurrency exchange committed to providing you with a secure, convenient, and highly functional trading and investment platform. Available across all countries as a non-KYC exchange, get global access to over 150 trading pairs with minimal fees on both spot and futures contracts. Join today to get $5,500 in sign-up rewards and get 15% off all of your trading fees by signing up using the link in my bio or by using the code 1GG3 when you create your account. So diving into Bitcoin on a 4-hour time frame, let's talk about the effects of the recent crash on Bitcoin. So we can see now here on a 4-hour chart, we're actually retesting some really crucial levels of support, namely being 95 to 94K horizontal, right? The sort of range low of our horizontal chop zone over here that we've re-entered recently. Our monthly uptrend starting all the way back from Monday, the 19th of November, as well as the 200 EMA input here into the market cipher A. That is this red sort of curvy line that we can see at the bottom there. So essentially what this chart tells us is that while Bitcoin holds these levels of support, we are in horizontal chop. Obviously, the charts do not look great. We've had a really, really steep drop here. And considering the current macroeconomic climate of uncertainty, it's quite unlikely that we're going to see a massive recovery from Bitcoin just yet. If anything, what I'm personally expecting is maybe some moves sideways or a continuation into the sort of bearish territory, and in a drop below this level of support here at $94.4 thousand, a continuation to retest 90.8 and 91,000, this sort of region over here. Now let me quickly justify to you guys why I believe that. First of all, taking a look at our uptrend over here, this uptrend is a little bit of a point of contention. I know there are a couple uptrends sort of circulating right now. This one is that next one. We've got a slightly higher one connecting the low here on the 15th of November and the next two sort of highs, as well as the candle close on the 11th over here. But essentially what both of these trend lines tell us is that Bitcoin has seen a very, very sharp move downwards, right? Oops, sorry, that's really, really evident. But until we close below the prior low within that uptrend, right, which is the same for both of them, they connect both points, we can't expect to see a continued bearish move. So that's the trigger there, the base of that horizontal support. And in that loss there, what we also end up losing is the 200-day moving average. Now that is really important here on the 4-hour time frame, because the last time we lost that level of support was all the way back in October, when we were still traveling within this sort of massive descending channel structure. If you guys remember that, it was 8 months long, and it happened from like February all the way until September, when we finally had, I think, either it was rate cuts or Donald Trump winning the US election. I can't remember which one it was. I think it was Donald Trump. Regardless, right, we're in that massive sort of channel of consolidation, and there were a couple really, really critical moments. And the reason why Bitcoin wasn't able to push upwards was mostly because of the economic climate, because rates were being paused rather than cut, and people had been expecting cuts for a really, really long time moving into 2024, right? And so if we're going to see that sort of price action once again, it is a really big signal that Bitcoin is going to be entering into an extended period of bearish to sort of sideways consolidation. And that is what the loss of 200 EMA on the 4-hour time frame would suggest to us here. And that would be the loss of this level of support at $94,000. So in that move there, we can then expect a bearish continuation into the next level of support, aka the sort of next low within both uptrends once again over here at $91,000 to $90,800. Below that, we have the first range low here at 88.7, and then the second range low at 86.6,000, both of which are bearish targets if the prior level of support has been lost. If we're looking for a sign of strength that the market is sort of surging back upwards and we're regaining, or investors are regaining sort of confidence in the market, what we're really looking for is the breakout of this level of resistance here at $102.5 thousand. So not only is it the range high of this sort of horizontal chop zone here on the 4-hour time frame, right, where we can see every single time we sort of break above that and retain above it as a level of support, we see rallying, but also on the hourly chart, we can see that it is the prior high in our current short time frame downtrend. Now, with all trendline breaks, downtrend or uptrend, what we really need to see to signal a shift in the narrative is a push above the prior high or low in that trend line. So in this circumstance, the prior high is that exact 102.5K resistance. So once again, providing confluence that in order to see a bullish shift for Bitcoin and a move back up into, I guess, bullish territory, that is the key level that we're looking to break, and that is going to be, I guess, the bullish trigger and sign of strength that we're looking for from Bitcoin here. Until we kind of see that, this sort of horizontal chop is quite expected, as well as potentially, you know, a loss of this level of support and further bearish correction as well. Zooming back into the hourly chart, actually, let's go into the 30-minute chart. what we're seeing isn't really all that great. So we're seeing a little bit of a symmetrical triangle formation here on the short time frame, right? We've got higher lows and lower lows, higher lows and lower highs, guys, on the charts here, hence the symmetrical triangle formation. But on the RSI, we can see that despite these two higher highs here on the momentum indicator, so increasing bullish strength and buying pressure, the highs here on the price action are still lower than each other. That's hidden bearish divergence and suggests that despite this gain in strength, it's still not really enough to push past all the selling pressure that we're experiencing here, therefore leading to a high probability of this breakdown here from that triangle and a move into retest that base of support at $94,000. So moving over onto Total 3 to talk about the rest of the cryptocurrency market. So we've already talked about Bitcoin. We know the key bullish trigger, our level of support, levels following that consequent loss of support, and the probabilities of holding support on the short time frame. On Total 3, it's a little bit more cut and dry. Total 3 right now is very highly correlated to Bitcoin. If we take a look at Bitcoin dominance, we can see that we've pretty much retraced all the way back up to pre-rally levels and are sitting at 58.9%, which is really, really high for Bitcoin dominance. And what that essentially tells us here is that until we see Bitcoin pivot, altcoins aren't going to pivot. It's very likely that until we see that shift, we're going to see continued bearish trajectory from Total 3 or otherwise some sideways chop. So if we zoom into the daily chart, we can see that we are currently retesting a huge level of support and are very, very close to losing that level of support. If we close below that on a daily time frame, what we can most likely expect moving forward is a continued bearish retracement to the next key level at $839 billion. Now that level is probably the most important one to be looking out for. And the reason for that is because $840 billion is essentially equivalent to 48K on Bitcoin, the dead cat bounce level of resistance. So generally, breaking above those sorts of levels of resistance, that crucial bullish trigger or macro bullish trigger, results in a move all the way up to the all-time high, which we saw, and in breaking above that, a move into price discovery. So altcoins or Total 3 fail to break into price discovery over here at 1.13 trillion. However, in reversing and rejecting from that, failing to then hold support or flipping support here at $140 billion is a really, really red flag. It essentially tells us that this rally was unsuccessful in its entirety, and we are now entering a high time frame bearish trajectory. That is why it is the most crucial level for us to sort of hold, right? It is our key macro bullish trigger. Now, moving on to the flip side, what we're really looking for in terms of that regaining strength from altcoins is very clear, 113 trillion. If we break back above 113 trillion, it is safe to say that altcoins are re-entering a parabolic phase, and we're going to see continued, really bullish price action there from altcoins, and it is very likely then going to be safe, well, as safe as crypto gets. It's still a very volatile market. A safer option or a safer opportunity to purchase altcoins as opposed to trying to buy these sorts of dips, because while Bitcoin's going down and Bitcoin dominance is so high, regardless of whether or not Total 3 is retesting these levels of support, the probability of it going lower, if Bitcoin is going lower, is always going to be higher, just based on the current market stance, based on the current uncertainty with regard to risk assets, right, because of interest rates. The sort of 113, sorry, why do I keep saying 113? $1.13 trillion level is the key one to be looking out for in terms of a regaining bullish strength. Alrighty guys, that is all the analysis that I have for you today. If you enjoyed the video or you learned something, don't forget to smash that like button and subscribe to the channel. If you're after even more content, be sure to check out my free Telegram for daily updates as well as crypto and economic news. And if you're interested in my VIP channel, you can get more details over here. VIP gives you exclusive access to my personal trading setups with exact entry points, targets, and stop losses. And if you are a trader, don't forget to sign up down below to BitUnext to get 15% off all of your trading fees. I'll catch you guys in the next one. Bye!